Hello guys, so on today's video we're going to be talking about one of the most used or the most common names when it comes to what we call price patterns, because on this series I think this is the third or the second price pattern I'm teaching you guys, because one of the highest way you can be able to have very solid trade or very solid signals in forex trading is when you are able to use different structures or even price patterns to come up with very good signals. And on today's video we're going to be talking about one of the most used terms or one of the most used terminology when it comes to price patterns, which is what we call the bullish head and shoulders, which is what we call the head. You have your head and your shoulders, what we call the head and shoulder patterns in forex trading. So what the heck is head and shoulder patterns in forex trading, and how can you trade the head and shoulder patterns in forex trading? Hello everyone and welcome to my channel. My name is Ndemazeah, Godlove, and on this channel we talk everything about trading, business, personal finance, crypto, and tips to help you stay profitable as a forex trader. So if this is your first time coming to my channel, please don't forget to hit that subscribe button to subscribe to the channel so that you can always be updated once I come up with awesome content like this. Good. So what are we going to be covering on today's video? You can see on my board we have our very bullish and bearish head and shoulder patterns. So on our table of content, we'll just be going straight to the point. We're going to be talking about what is a head and shoulder pattern. All right. So what is a head and shoulder pattern? What is inverse head and shoulder? So head and shoulder pattern is here. So what is now what we call inverse head and shoulder pattern? We also cover that. Then how do you trade head and shoulder patterns? On my left or on my right or whatsoever, depending on how you're watching, you can see we have this lady here, and we have the first shoulder, we have the left shoulder, we have the right shoulder, and now we have the head of the lady. All right. So in forex trading, it is the same thing. You have a pattern like this. It goes like this, goes like this, then goes like this, then go down. All right. So that is an example of what we call a head and shoulder pattern. You have two shoulders. You have two shoulders, and now you have the head. So how do you trade this particular pattern on this lady? All right. So how do you trade something like this? That is what we're going to be covering on today's video. Let's go now to the next slide. Good. What is a head and shoulder pattern? Just as explained earlier, if you can see on my screen, we have a typical example. Here of a head and shoulder pattern. A head and shoulder pattern is a typical. Write this down. It's a typical reversal signal. All right. Just like on our previous pattern, on our previous chart pattern. If you haven't watched that one, please go back and watch the previous chart pattern. It is also a very powerful chart pattern. On our previous pattern, we did spoke of a double bottom, double top, and it was a typical reversal signal. It's the same thing here. Head and shoulder pattern is a typical reversal signal. So anytime you see this particular pattern, it means the market has already changed direction. You don't need any confirmation to tell you that the market direction has already changed. If the market was in a downtrend and you see something like this, it means the market is now in an uptrend. If the market was in an uptrend and you see something like this, it means the market is now in a down trend. So good. Let's start here to be able to analyze, so that I can show you how you can be able to come out with a head and shoulder pattern. You can see from here to here, the market is what? The market is what we call in an ascending trend. So the market is in an uptrend or an ascending trend, all right? But at this particular level, you can see the market came somewhere here, then retrace back to this particular level and form what we call the left shoulder. So this one forms what we call a left shoulder. Then the market picks again from this level and breaks that next shoulder to go up a little bit to that level, then turns back down again. See, so you can see the next shoulder is broken. It's like this lady is the same example I'm showing you here. See here, it's the same example I'm showing you on this lady. So the market was going here, comes to the shoulder, this lady's shoulder, then pull back. You can see the market pull back somewhere there. All right. Then came back again and break this neckline. This is where now we call the neckline, to go up to that next lady, to that lady's neck. Then come back again to that level. Come back again here. Then boom. Can you see? So the neck. So this is a typical example. This is a typical example of a head and shoulder. The same thing on that particular level. The same example, the same explanation on that particular lady, because that is a typical head and shoulder pattern on a human being. Then this is a head and shoulder pattern on a chart, because here you see we formed the neckline. The neck was formed somewhere here, just like the neck is formed. This is the neck. The neck was formed somewhere here. All right, good. So because of that, you now see the market comes back here, then go back up again to this particular level, and then break what we call the neckline. So as soon as the neckline is broken, that is where you get into the trade. All right, that is where you get into the trade. And now on the subsequent slides, I'll be able to show you how to place your target. So once the neckline is broken, how do you place your target? How do you place your stop loss? How do you place your take profit? How do you make sure you manage the trade to come out with a profit, or to come out with a reasonable profit, so that even if the next trade is a loser, or the next 3 trades are losers, you will still be making money at the end of the day. That's the secret, to be able to have a risk to reward in such a way that even if you have just 4 trades right out of 10 trades, at the end of the day you will still be making money in forex trading. There is no secret. It's just knowing how the forex market works, knowing how to be able to generate your own signals. Then you'll be able to make that money to reign in forex trading. So with that being said, that is an example of a head and shoulder pattern. I've already explained here and also on that particular lady, on that lady. Then let's go to what is an inverse head and shoulder. An inverse head and shoulder pattern is just the opposite. All right, it's just the opposite of a normal head and shoulder pattern. So instead of the lady standing where you have the shoulder, the left shoulder and the right shoulder and the head, now the lady is in an opposite direction. You see, that is what they call an inverse head and shoulder pattern. So the market was going down. It's like this. The market was going down. Then at this particular level, you see the left neck. The market goes up to this particular level. Then came back, break this one. So it must be able to break this level. So the market came back, break that particular level. Then went back here again. All right. Then went back here again. Then came back to this particular level. Then boom. You can see this is a typical reverse, a typical inverse head and shoulder pattern. This is the same thing. As soon as the market forms what we call the left shoulder, you are waiting for it to form what we call the head. This one will come now, called, this is the head. Then this one is what? This is the shoulder. This is the shoulder. Then this area is what we call the neckline. All right. So you have your head, you have the left shoulder, the right shoulder, the head, and the neckline. As soon as your neckline is broken, you get into the trade. Your stop loss goes below the right. Your stop loss goes below the right shoulder, and you go for 2:1. It's the same thing. So an inverse is just the opposite of the normal person standing. It's now like the person is in an opposite direction, because you see now this person's head is actually facing down instead of facing up. It's like you're playing a game. This person is, so that is why they call an inverse head and shoulder pattern. Now let's go to how do you trade? How do you trade a head and shoulder pattern? As easy, I've already mentioned it I've already given you a recap on the previous slide, but let me just go through again. Only get in at the break of the neck line. I will explain that. Then stop loss should go below the right shoulder, and your take profit should be 2 arrow. Simple as that. All right. So where do you get in? Only get in at the break of the neck line. Where is our neckline? Here we have our first shoulder. Then the market comes down. It's like the market is going up from the head, the first shoulder, comes back to where we call the neckline, then go up from where we call the head. This is the head here. Then now go again to form the right shoulder. And now this is once the neckline is broken, that is where you get in. So you get in somewhere here. You will be able to sell this market somewhere here. Your take profit, once you sell, your take profit, if now your stop loss will go below the right shoulder. This is our right shoulder, so your stop loss will go somewhere here. And if from here to here is our arrow, which is equal to our risk, then our take profit now will be from here to here, which is what we call 2 arrow, which is 2 times our risk. As easy as that, all right? So if the distance from your entry to the right shoulder, or to few pips below the right shoulder, is 50 pips, then you are targeting 100 pips. If the distance from here to here is 100 pips, then you are targeting 200 pips. If it's 100, it can either be in a dollar amount or the pip amount. So if it's $100, then you are targeting $200. If it's $50, then you are targeting $100. As easy as that. If it's $50 and the distance between this level and your next support or next resistance is just 50 pips away, that is a risk to reward of at least 1:1. So the trade is invalid. You must take trades that have a risk to reward of at least 1:2. So that is how you get into this trade. That is how you manage the trade. All right. And now the same thing will happen if it is an inverse. If this person was actually upside down, if the head and shoulder pattern was an inverse head and shoulder pattern, an inverse head and shoulder pattern looks like this. You see the market is going down. Comes here, it forms our first shoulder, shoulder. So it goes up again to this particular level where we call the neckline. So the neckline will be somewhere there. Then it comes back again, break this first soldier, then go up again to this particular level, then came back here, retrace this level, then break that level. So where you get in is this same level. They show the neckline. The neckline. You get in here, your stop loss will go here, and your take profit will be what? 2 arrow, 2 times your risk. As easy as that. So whether it is a normal head and shoulder shoulders pattern or an inverse head and shoulder pattern, that is how you are able to trade. You are able to trade head and shoulder patterns in Forex trading. All right. So with that being said, let me see if we still have anything good. Remember, you have to remember a head and shoulder pattern is a typical reversal signal. And being a typical reversal signal, you don't need any other confirmation to tell you that the market has already changed direction. And since you know the market has already changed direction, always go for a risk to reward of at least 1:2. There is no other definition. There is no other magic. Always wait for your neckline to be broken. I've shown you guys how to be able to determine the neckline. So wait for the neckline to be broken. And once that neckline is broken, go for a risk to reward of 2 arrow, which is what they call the risk to reward of at least 1:2. With that, if you are following those steps, even if you are right just 4 times out of 10, even if you are just having an accuracy of 40%. So out of 10 trades, you have just 4 trades right. No matter how crappy your strategy is, at the end of the day, you will still be making money in Forex trading because of the power of risk to reward. You are only taking by those heavy runners. You are only taking by those trades that will build money in your bank account. You are not just running to get into any trade. Don't suffer from what we call FOMO, all right, the fear of missing out. No, the same charts are still going to be there tomorrow. The same charts are still going to be there in a month to come, a year to come, 10 years to come. So if you open your chart and you don't see a setup that will give you a risk to reward of at least 1:2, just know that that trade is invalid. Go to another chart. In a day, we have more than 30 different currency pairs that you can trade. You can't even trade all. There is no day I can open my chart and trade all the setup or trade all the signals that are available. There are too many signals. So only pick the best signals that have at least a risk to reward of at least 1:2. Before you get into the trade, always predefine your risks. You should predefine your risks, all right? So that you know, okay, if the market gets to this particular level and if it wasn't a winner, I'll comfortably say, okay, it wasn't a good day. Or if it goes my way and then it gets to this particular level, I'll comfortably take my profit at this particular level and I'll call it a good day. So always predefine your risks before you get into the trade so that you can place your trade and walk away and know that, okay, today I've already done my best. The market is going to do its own thing. And even if this one is a loser, at the end of the month, I'll still be making money because the next trade I pick, even if I have 5 trades in losers on the row, the next trade that I have will be what we call a long run or a heavy run. We should be able to bulldoze. We'll be able to cover all those small losers. It's like losing $50 for 5 times. Then with one trade, you cash a risk to reward of about 1:6. That 1:6, you've already made $300. And for those other 5 trades, you lose just $250. So at the end of the day, you still have a profit of $50 or $500 or $5,000, depending on your account balance. So only take those trades that have a risk to reward of at least 1:2 and predefine your risks before you get into any trade or before you even start trading the head and shoulder pattern. This is a very important pattern. So with that being said, if you want to be part of a community of Forex traders that are sharing ideas on a daily basis, or if you want to get to me one-on-one, on this channel now we have what is called channel membership because we're already heading to 20,000, which is practically impossible for me to get to people one-on-one. So if you want me to get to you one-on-one, there's what they call channel membership. You just need to click on join, and when you choose any particular level that you want to be part of the channel, I'll be able to see, and with that, I'll be able to get to you one-on-one. So if you one-on-one mentorship, that is the only way you can be able to get to me. Now, if you want the best broker, the link is on the video below, and you need to be able to watch this video immediately after this. Watch this video, because this is the next pattern, the next price pattern, which is also very, very powerful. Then also watch this playlist so that you can be able to watch all the videos or rewatch all the videos on this particular playlist. And if you like the way I teach and you've gained something from this particular video, then click here to subscribe to the channel. Till then, I'll see you guys on the next video. Peace.